Here about 2:30 on Monday, 22nd of October. And a quick reminder about our disclosures. Make sure that you are using trade capital that you can afford to lose in case you do. Risky business, and no one knows. As I posted in last night's post and video, no one knows where the market's going. We make educated guesses the best we can. Many different ways to measure the market. Right now, just taking a peek again at the frame that Tony from TraderSmarts had put out there. He had suggested that perhaps we would want to look at what comes first, 27.15 or 28.15. So here's a mock-up of that range and how we would analyze it. Talked about this morning in our live trading room. One of the key ideas, the basis of this chart was that 78 to 82 resistance. And on the other side of this, obviously, this 48.52 supportive and range trade the range. We like the idea of 65 middle based on this chart and have recommended to our traders to make sure you are paid on the long side 62 to 65 from the lunch bounces. And currently we've got range trading day, albeit a very good one in terms of the range that we've been able to articulate. And we had suggested traders be done by 75, 72 to 75 on the long side. Just an odds type of idea, pretty strong bounce, knock shorts out of position. And we can see a lot of tails back in here too. So this was one of the charts that we liked. And it was something we wouldn't normally just say, okay, let's take a look at that. But we will take a look and set up ranges like this. And this is probably a pretty good idea that Tony's come up with, and it helps us to frame the ideas. So first things first, you got to get by this 80 area before you worry about 90s. And obviously, you got to worry about this 50 area before you get down here and worry about those 40s and that 38 and a quarter. Middle. So this look has helped us today to understand the range trading approach. 15-minute Globex stalled beautifully. The rain line came down, sharp bounce, sharp retest of the lows, and we've been chopping in this range from 75 to 50, and really like that range right now to get resolved before anything else. So for now, that's the range we have suggested traders should be looking at. And by that basis, that 62 to 65 need to be paid if you are long. Day's range pretty clear, stalled at the middle. Breakdown earlier, 3-point breakdown. Knocked out stops and then came right back down to retest the lows. So this is a range trade morning after trend day. We stalled at the middle from Friday. We like that area as the resistance zone. And so far, that is still our resistance, 82 to 85. All day angels and demons showing us the important support zone for now. Obviously, the resistance zone, aggressive resistance, that 67 area, and then obviously up here at that 75 spike high. And tried to knock some stops out and right back down, retest. So far, the shorts have had a good day. We have advised shorts to make sure time and price, they capture the lion's share of what they want. And if you've had a good day, really, you have no reason to do anything else. Lock your profits. And if you choose to play a little bit more, fine, but never give back a substantial sum of what you've worked for all day already. And our predictive model has worked to hold the cap the highs this morning. So far, still intact, and obviously retesting these lows from Friday. Get to have a natural pivot in this 62 region. And the bottom line is that today has been a good day, but only one day out of many to trade. No one knows where the market is going. We try to take our points out of the range, and we never think that we're going to get every last ounce out of the swings. It's impossible. Grab a couple of points out of the smaller swings and fit those into the bigger swings and see where you think the best edges are. Obviously, the best edge this morning we thought would be down in the 50 to 55 range, and just on top of it over here on the other side, this 85 area resistance. And you can see that where markets turn. So this predictive model is working off 73.5 right now. And this is framing the 2-minute chart on a RTH basis for our lows and our highs and our in-between areas of interest. And currently all I'm seeing is range type trading. I've advised these shorts not to think of a big plunge. We could get one. Everybody's calling for a crash. October's running out of time. I get the emails like you do. But until then, we're still going to range type trade. And as long as you have the discipline to take yourself out of a trade that's not working, what's the worry? Play the ranges, try to scrape something out of the day every day. And a reminder, we've got a special presentation coming up November 8th. Ninja Trader kind enough to sponsor our webinar, and hope to see some of you there. In the meantime, stay safe and use stops. No one knows where the market is going, and the worst thing we can do is to freeze like a deer in headlights.